If you're new to Forex trading, crypto trading, or anything like that, and you want a simple to set up and really successful 5-minute scalping strategy, then you've come to the right place, guys. This is going to be really a game changer if you're new to trading, perhaps have not been that successful with day trading so far. So I'm going to talk you through everything you need to do to set it up right now. So first of all, guys, we're going to jump across to tradingview.com, and then it will be basically set up like this. And on TradingView, we then got a few indicators that we need to add. The first one here is the VSS. So we just want to find that. And it's called Venki's scalping signal, which is just searching VSS, Venki's scalping signal there. And then the next one that we want to find is down here. And to find that, we just need to search here for Williams and then click on this Williams percentage R. And that's going to bring up the indicator that you can see down the bottom. Now, first of all, to set up the Venki's one to look like it's looking currently, you need to do a few things. Now, you'll see when you first get this, these will all be checked in, guys. But what you need to do is you need to go down through the list and deselect all of them, apart from these four at the bottom: the entry and exit arrow, the MA trend line, the labels on price scale, and the values in status line. Okay, so only those four should be showing. Then we're going to click across to inputs and make sure that we have 8, 20, 50, and 200. And then we can click on OK. And that's set up there. Now down below for this one, we just want to click on the settings. We want to click on style, make sure upper band is 40, lower band 80, and then change the colors to being bright colors. And instead of having a dashed line, change it to a solid line here, and then go back to inputs, ensure that this is 21 and EMA is at 13. Okay, everything is good to go. So very simple steps, guys. So this is currently looking at Forex Australian dollar versus the US dollar, but we'll check it out on Bitcoin in a moment to prove that it works not only on Forex, but also on crypto and any other charts that you might be looking at. So let's just go through, and I want to find a perfect setup to show you what we want to be looking for. Okay, so this one here is a very good example, right? Notice that it's come and started above the red line. Now we have this line that runs between is a green and a red line. I never want to take a sell on a green line, and I never want to take a buy on a red line. Okay, so first of all, it's a red line. I'm looking for a sell. I've got my first indicator, which is the yellow arrow pointing in the direction of a sell. We've then got the red line. So my first confirmation is the yellow arrow. 2 is the red line telling me this is a sell. The third one, it starts above the red line and then it closes below the red line. Okay, so these three factors pretty much alone are pretty consistent, but we're going to show you how to make it even more profitable and even more consistent if you just stick around for a moment. Now, the reason I've got the Williams on below is that this also is a kind of like a further indicator to show what's going on. So the yellow line, when the yellow line is crossing up above the blue, it's showing the market's bullish and we want to buy it. If the yellow line crosses below the blue, then we want to sell it, but obviously only once we've considered these first 3 steps. So looking at this arrow here, I want you to come down and look, and we can see here that we've got the yellow line crossing under the blue line, which shows that there's going to be a sell. Yeah, yellow line dropping, blue line coming up, shows to me that I want to sell it. So in terms of my stop loss, entry and everything, I would have entered at the bottom of this candle when the candle closes, after it's fulfilled all the criteria. My stop loss can be just above the wick. Okay guys, so I'll take my entry point from here. My stop loss is just above the body of the candle, yeah, the body of the candle. And then we're looking for a 1.5 risk to reward ratio, which will drop down here. And here you can see, guys, perfectly would have hit our target before then turning around. Okay, so the 3 steps, guys, that we need to remember. Yellow arrow gives us the indication, tells us here that it's a sell. We've got the red line, again indicating that it's a sell. We've got the red candle that drops down through the line and closes below the line, tells me it's a sell. And then I look down below and the yellow line has crossed under the blue line. Again, that's my 4th criteria. Down below, sell. I'm then going to take a 1 to 1.5 risk to reward ratio. Okay guys, we've got another good example here. This time we're going to look at a buy. Okay, so the first one, we've got the yellow arrow is pointing in an upwards direction. So 1, heading in a buy direction. 2, we've got a green line showing that it's buy. 3, we've got the green candle here that opens below and then closes above. Good to see what we want to see. And then the 4th one is we're looking down below and we've got the yellow line crossing up above the blue line. So the yellow line crosses over the blue line, showing that we are moving into a bullish momentum. We're then going to open our trade and put our stop loss just under the body of the candle. And again, looking for a 1.5 risk to reward. And as you can see, guys, because the risk here was really low, we will also have hit it very, very quickly. Okay, so there you see, guys, we would have hit this within just a few minutes, probably about 15 minutes, perfectly right there. Now, I want to show you 2 examples that are not good entries. Now, just as an example here, guys, right, we've got this one. The line is coming up. It's green. It's bullish. We then had a sell signal. The problem with this is we're above the green line. The line is green, and also it didn't breach through the gap. Okay, so this is obviously a bad one, and we need to always confirm the 4 points. Okay, so all of the 4 points need to align for this to be a solid strategy. But you can see how often these solid setups for trades come along, guys. You can see on this candle here, we've got yellow line above the blue line. We've got an upwards direction, we've got a green arrow, and we've got a close above the green line. Okay, so again, we would have taken from here, we would have put our stop loss just under the body, and then we'd be taking our 1.5 ratio, guys, which, as you can see, pretty much hits on the next candle. It does come down here, but obviously we would have already taken our profits again here. Just to show you that it works on crypto as well, guys, we're going to jump across and look at a Bitcoin chart. Here I can see a buy setup straight away. We've got the yellow arrow coming in an upwards direction. We've got the green line, and then we've got a green candle that closes above the green line. We've also got the yellow line over the blue line. Therefore, I would have taken my long position at the close of the candle body here, my stop loss just under the candle body there, and then I'm looking for a 1.5 risk to reward ratio. And as you can see, guys, pretty much perfectly, we would have touched it there. Even if we didn't, we came back down, we would have then hit it again here. Multiple times, this is going to work. Here's a bad one, guys. You get a signal for a sell, but we've got the green line underneath, so we're not going to take it. So basically, guys, as long as you're sticking to that 1 to 1.5 risk to reward ratio and you set everything up right, you're going to pretty much win like 90% of these trades. Obviously, there's going to be losers, as there is with every trading thing, but you're winning 90% and you're winning, and you're going to win 1.5 to 1 loss. Then that's always a great setup. I recommend you go and try this out on a demo account first, guys, so you get confidence using it. Make sure you're using appropriate lot sizes so you don't get caught out. To calculate your lot sizes, if you're new, you can just go across to babypips.com, and then you can use the position size calculator. So say your account balance is, let's say, $10,000 just for example, and you want to risk, let's say, only 0.5%, and your stop loss you've calculated at 10 pips on the euro, US dollar, or whatever it is. You just click calculate it, it then tells me that I should use a 0.5 lot, which is risking $50 in order to try and make $75 on the 1.5 versus 1 risk to reward ratio. Guys, I hope that helps you out with your trading. Let me know how you get on down below. It'd be really good to hear. If you want more tips and strategies about how to day trade both Forex and crypto, then make sure you leave a comment down below as well. If you got some value out of today's video, then please smash up the like button. It helps me out more than you know. And if you're new to the House of Crypto, you want to learn more about crypto, day trading, etc., then make sure you subscribe to the House of Crypto to be kept up to date with all the latest happening in the markets. Thanks very much for watching, guys, and I'll see you soon with another video. Bye-bye.